Good afternoon. Thank you for joining us on this rainy day. I know what happens when it rains in Claremont. We all turn into hermits and don't do anything. I am excited to welcome a speaker that I had the fortune of seeing at a Chartered Financial Analyst CFA event in Santa Monica in December. The students that I brought with me were so enamored by his contribution to a panel and his very genuine way of connecting with the audience that when we connected again via email, I was really eager to bring him out to Claremont, and thankfully he's combining a trip here for work to visit us. Without further ado, Raj Udeshi is here to join us. He is currently in charge of business development at Hidden Levers and calls himself the co-founder man, which there's probably a story behind many of the words that we use to describe Raj. Raj spent many years on the street, and that street, of course, would be Wall Street, and is here today to talk about unlearning some of the potentially bad habits, erroneous information. Not really sure where he's going to go with that, but I think we're all going to find it informative, and it's going to be a really nice compliment to a student body that has a very strong interest in working on the street. So without further ado, Raj, I'd love for you to join me on stage. This is your clicker.
Yep.
We're good to go. All right.
Do I need this? How's this go? Hey guys, can you hear me? Do I need a mic? Do I need a mic? Do I? Can I take this thing out? Can I get a real mic? Anybody? All right. Yeah, I'm not going to stand behind that podium. That, again, if you stand behind this podium and speak, it's just fear. It's just fear, you know? It's like protecting me to sheep. I'm better than you. I'm Raj. I'm one of the founders of a fintech company called Hidden Levers. Oh, no, just a real mic.
Oh, just like handheld?
Jay-Z.
Yeah, okay, I got you. Handheld?
No bulletproof vest. I thought about talking just about fintech and what we do, but I thought I've had some real self-reckoning lately. I just turned 40 last Sunday, which is really weird. You know, I'm a Benjamin Button character. I see some of those in this room too, including Michelle. Is that better? Sweet. Yeah. So I just thought about some of my darkness, inner darkness, and where that comes from, and how the things that gave me this vertical expertise in financial services, right? Sales and trading and law, some advertising, all those things I came through, but big business verticals that gave me serious expertise to find the gaps in financial services and build tech around it to help solve some problems, some pain points, replace people, automate their jobs, all those things that fintech helps with, or technology in general. It just as much corrupted me. It just as much created some darkness in me. And so just that introspection led me to talk about that today. And really what I want to talk about is most of what I learned on Wall Street that got me here, I needed to unlearn, not only for success with tech and another vertical completely, but in life, honestly. I had to unlearn that. And if you talk about Wall Street culture, the closest thing I can say is not a locker room, but more like a prison culture, success in prison, right? I'm sure you've seen Oz or, I don't know, Breaking Bad, other things around that. It's not that different, suits and ties and a lot of guys. Our company's been lauded. We're a bootstrapper. I'll tell you a little bit about that. I came out through the dot-com era, class of 99, Northwestern. Avoided law school for the dot-com boom, had a minor success with a company doing decision-making tools around credit cards, insurance policies, online brokers, just a plethora of financial services that were bombarding us, and just Java-based ways to navigate that data entry and tell me what you want, and here's a credit card for you. And so that was an easy success. Went to law school from there. I went to advertising for a couple of years in New York. Went to law school after 9/11. After law school, followed a girl to New York. Went straight to Wall Street instead of going through the law firm thing. and then lost my job in 2008, 2009, financial crisis. Never looked back. Instead of a macro fund, started a software company, and now a lot of my old friends are losing their jobs or whatever, or just unsatisfied, and they're like, oh, I wish you did what you did. And so grass is greener sometimes, who knows? But we're still bootstrapped. We never took VC money because that wasn't, we did not want that experience again of these shark fangs coming, and telling us what to do, giving us money, that bribe. A lot of you probably have student loans. VC money is a student loan. But the company's done well. We've been in Barron's. It's for those of you guys doing regression analysis or econometrics, that's predictive analytics is what it is. If I could take the beta of every security, not only to the S&P but to oil prices, I have its reaction to oil. I have its reaction to 10-year treasuries, to gold prices, to any kind of lever, economic lever, and I can start to create a graphic equalizer of the economy and see in real time, using new web interfaces, what would be the impact on a bucket of investments. And that was the original kind of V1. Now it's a full platform offering, like, they generate proposals for their clients, or they do monitoring of risk using this system. So proper commercialization of it. We were this stress testing island that made kind of bridges back to the mainland of financial services, products people actually need. But these are the kind of underlying macro trends, and any project you start, make sure you have 4 to 5 economic trends or macro trends supporting you. You're just a boat in this ocean, and these macro trends are pushing you along toward the shore. Okay, they're pushing you. If you're fighting that, if you're creating a photo book company right now, good luck. It's digital photos, right? Whatever. There's probably too many of those anyway. But have those. For us, images is conversation. You'll see that today. Communicate through pictures. You can even see it in text and GIFs. It's everywhere. It's how people communicate. Macro uncertainties. Talk about head on these macro things. Make them as cool as talking about skateboards or designer high tops, whatever. Make macro analysis cool. Make regression analysis cool. That's a challenge for us. And then the last two trends you're going to be dealing with the rest of your life. You'll probably be upper middle class. Maybe you'll get beyond that. But that's where you're headed if you're headed into finance. And that luxury that's automated through tech, that Amazon's rocking at. All the banks are trying to do that, right? They're wanting to do that. Some sort of better than an advisor through technology, right? Because Amazon Prime knows you better than your lawyer or your doctor. They know you, right? Your credit card company knows you best. So, and then mass affluence, right? Believe it or not, in the middle class that we think is eroding completely, 30% of the United States is outside the middle class, north of the middle class now. In 1980, it was like 12%. So the middle class is dying, but the upper class is increasing. It's just more stratification. So anyway, those are the underlying trends. Make sure for whatever you do in life that you're able to put together 4 or 5 macro trends that exist even if you never existed. And your project and your great idea never existed. So as you develop your ideas, make sure you do that. As you choose jobs for the future, make sure you have that. Where is the tide going? Okay? All right. So I think what I'm going to talk about now is, that's kind of the company. Where is Hidden Levers now? We're a bootstrapper, probably around $3 million in rev, about 10, 11 people, and that's the kind of dynamic. Never be fooled by big numbers when you're talking about tech companies. If I have a 900-person development shop in southern India, they're just not doing that much. If I have a huge army of uninspired coders at a big bank, they're probably not doing that much. They're just trying to do what they do and go home to their wife, whatever, to their husband, to their kids. A team of 12 is what Instagram was at $1 billion acquisition. A team of 34 is WhatsApp at acquisition. And that's, be moved by those if you want to do things, as opposed to big numbers or TechCrunch articles, things like that, or big VC rounds. Who's on their board? So what I want to talk about is a lot of things I learned on Wall Street. Maybe you've seen some movies about it. Maybe you've had an internship. If you're a woman, you've definitely felt it working on you've felt those heavy things. And how I had to unlearn that if I was going to be successful in navigating tech. Most of fintech, like other verticals, you're not selling to the end person. If you are, good luck to you, but you're probably selling to businesses, right? Big banks that can distribute, want to be a reseller for your stuff, or they buy your stuff in an enterprise capacity. Whatever that is, the skills you need there, you know, a Wall Street background or some skill sets are very important and substantiate how you got there. You're not going to come in working in a completely different industry maybe, but it will destroy your success also, and then also in life. So let's talk about them. I've got about a dozen, I'd say, and I think I'll spend the rest of my time talking about what I learned and how I had to unlearn it. All right. Oh, hey, I'm driving for myself today. All right, first one, aggressiveness, right? I mean, rabid dogs on Wall Street. I mean, whatever industry it's in, you know, whether it's investment banking or the trading floor, there's a lot of ego that develops, and you have to have that aggressiveness in general, right? But it can be overly aggressive. You can call people too much. You can start you can just start being too rough, right? Too much from the street, and a lot of times that works, right? Loud voices and you know, being right sometimes makes you cocky. All those things, and so that leads to the worst part of you. And guess what? The cycles, the decision cycles in an enterprise software decision, dealing with people that don't come from that culture, they will take it as hugely aggressive. I remember this woman who is the software decision maker for a huge broker dealer, you know, multiple kind of big arm broker dealer. I just kept interrupting her every time. Every time I interrupt her. And it wasn't me thinking, oh, that's a woman and I can just interrupt her, or you know, she's the customer and I got something hard to say and what I say is more important. It's just became part of who I was, you know, and that kind of aggressiveness and didn't suit me. I lost that customer. You know, even now sometimes people around me who are more diplomatic at the company will try and call and apologize. It's just that's a burnt relationship. On Wall Street, that made my day. You know, if I'm the loudest, and people may listen, but you know, the loudest person in the room becomes the weakest person in the room mostly, but not in Wall Street, not in prison either. That might be intimidating, right? And so you have that aggressiveness, especially like a lack of diplomacy, my way or the highway, all those things that come, and you could be right, and a lot of times money just talks. If you were right, then everything else in that Machiavellian way was justified. Whereas if you do that in fintech or in life, you could be right, but who cares? Like, who cares? You still lost that client. You know, fintech, it's not like the actual technology a lot of times is commoditized. The algorithms, so what? They're commoditized. You know, if Leibniz and Spinoza came up with calculus at the same time 500 years ago, so what? This code can be replicated. It's more about relationships and how you manage things and whether your customer support's good, whether you're nice to deal with. You know, you can't be a total asshole in fintech. On Wall Street, a lot of times that's what gets you success. You cannot do that on Wall Street. You can't do that in a marriage. You can't do that with kids. You just can't do that. You're going to lose. Oh, it's me. Oh, yeah. Rock on. Nice. Yeah, driving's not my thing. Which is the best, actually. You know, a huge node of tech success is having somebody drive for you, right? And that's on different levels. It could be a junior employee where they're learning, they're getting comfortable, and then you make yourself redundant. It could be a customer, right? Your best customer, or the president of that company who just wants to do it to feel cool because now they're involved in tech. It's great. It's great. So extreme language, this is Pulp Fiction, if you remember. Pulp Fiction made the F word normal, right? It just did. Now and like you can just drop that anytime. People just do that. You got what's that guy? Gary Vaynerchuk he just swears in all his speeches. There's so many of those, even in TED Talks. And so extreme language on Wall Street's a basic thing, right? And unfortunately, it's become a basic thing in our lexicon. But in tech, not so much, honestly. Not so much, especially because they may remember you, but not in the great way, right? They may remember you. And so, especially making it part of your norm, it also leads to aggressiveness, extreme language, right? Your baseline is that. You never need it, though. If you never use it in tech, if you never use it in your life, you will be so much better off, you know. But on Wall Street, extreme language also has to do with racism. There's words around Jewish people, blacks, Indians. I worked on a Latin American trading floor, so all kinds of inter-racism between the different Latins that I would never even know, except for having worked there. And it was just so normal, right? It was so normal. And those are the things that I would probably get fired for those things in other places. But they're just so normal there, right? And they're taken. It's almost friendly to be that way. And if you couldn't take it, you just couldn't work there. So that extreme language, not good in fintech, for sure. You'd have to drop that. And don't get me wrong. I mean, the people that wear suits and nice clothes and cufflinks and all that, I mean, who does that, right? Who does that? Criminals do that when they go to court. Am I wrong? So the appearances are not it. That's who's doing that. So just because somebody has a nice coat and an expensive suit, it doesn't make them a good person or a clean person or a classy person. You know, that's through your behavior, and a lot of that is language. So, I mean, for your generation, I would say it's because of Pulp Fiction 94, it's so normal. It's just so normal, the F word now. If you can lose that from your vocabulary, I think you'll have success, you know. Having class is something that's bigger than your resume and is not a commodity, you know. Misogyny, right? So, okay, 1994, the F-bomb starts becoming normal. 2017, 16, the P word now is totally normal. I was at the Women's March in DC, and to see these little girls and little boys seeing, uteruses with like power or two middle fingers and all that, that's becoming normal. But on the street, it was so normal already. You know, I remember my friend Ashley Roberts. She's one of the head traders for LATAM at JP Morgan, and earned probably 3 times more than her husband, and wore the pants. And she was the sweetest girl. She's a Canadian, you know, kind of like dark hair and freckles, like total girl next door person from rural Canada. And when she came to work, when she came to her desk, it was over. You know, she said it herself. I have to check my vagina at the door. She would say that herself. And so, you know, back then I took that as normal. And now it's like I will refrain from using that kind of word even as it becomes normal, you know, because it's a reaction to myself, right? Normalizing that kind of thing on Wall Street. And definitely not going to fly in fintech. Definitely not going to fly in life, where we're mostly guys, so we can behave a certain way, right? You have a country, my mother country, India, has too many men, right? It's led to a rape crisis. It's just demographics. Too many men, too little women, respect for women. And so Wall Street has that problem. It's just a demographics problem, right? And so is that changing? Maybe, but the reason is because fintech is automating away those men's jobs and women. It's just taking those jobs away. So, but at this high caliber level of dealing with a lot of big amounts of money and that, it's just egos get in the way. Some testosterone in girls, you know, and women as they earn money, they're instead of whatever equality they wanted. I remember seeing on Wall Street a lot of them would cheat on their boyfriends or buy expensive stuff, like take part in the same horrible things that men were doing. So it's like auto misogyny, you know, maybe not toward themselves, but toward, you know, just it wasn't like, okay, I've broken through a glass ceiling on income or accomplishment, and so my feminism is going to lead me to new directions. It would be sometimes more like, I can do the same thing these awful men are doing. It's just, you know, unlearn that though. Definitely in fintech, you've got a much more like unisex culture where I care about your skills as a coder. We definitely would, I hate to say it, but I would prefer to hire a woman coder the same way a Benetton ad needs that Chinese person, you know? That is happening too. So, you know, use it to your benefit, though. If you're a woman and you want to be in financial services, learn to code on the side, because you'll be able to do both. You know, if Jamie Dimon went through the sales and trading channel up to the top of JP Morgan, but today, you know, he'd have to have some coding talent to be able to trade the way he did, right? You'd have to have some coding talent. A lot of that stuff is algorithm based or based in that. Learn it like you learning Spanish. You know, I'm sure there's people telling you to learn Chinese or Mandarin to make it. Learn coding. There's more Chinese people learning English than there are Americans. So that's fine. Learn to code somewhat, and the languages that aren't sexier for the web, you know, that will maybe get you farther. Your own ideas on investing, all that stuff will be articulated through that. Pedigree. Okay, so this is something we share, right? I went to Northwestern, which is outside the Ivies, sometimes in the double digits, or whoever cares about that U.S. News World thing. You guys went to a really nice liberal arts school, or you're going to, right? It is not the Ivy League. And definitely Wall Street, because of the proximity in that eastern corridor, they care about that stuff. No one gives a darn in fintech about pedigree. And you know, I'm now 22 years out of school, high school. Sorry. Yeah, so what? I've been out of school for a while, and I'll tell you, the folks, and I'm a employer, so the folks that I interview from the Ivy Leagues and stuff, if I do, usually it's strike one that they did that already. You know, there's a hunger that you have coming from here that's more interesting to me, right? And maybe a small humility, a less entitlement. You know, I mean, as millennials, you are entitled no matter what, but maybe less entitlement than that. Number one rule in an interview, if you get to the interview, right? I'm not going to look at 1,000 resumes. I'm not that egalitarian. On Wall Street, it was more, oh, hey, here's a stack of 1,000 resumes, and no joke, they'll take half the stack and throw it away. And the reason is because those people aren't lucky. That's it. But pedigree definitely dominated conversations with the other half stack. For me, no joke, it's like I will make people put some words into cohesive sentences. The amount of resume drops there are, right? Cohesive sentences made of terms like oil prices, inflation, real basic stuff, right? Make a sentence of this that's cohesive. And it immediately takes away things. The reason that people are asking you for cover letters, right, is because it eliminates a lot of people that won't do it. So it's not just do it, but actually, if you take the work to individualize that, you'll get farther than pedigree, I think. You know, show them that you know them. And I'd say on Wall Street, that definitely meant something to me. Oh, and sometimes inferiority. You know, I worked at Bank of America. I ended up going to the broking side to some Latin American trading stuff, which I thought was cool and just gave me some real travel opportunities, as opposed to just one big job at Goldman Sachs, Brazil office. You know, I avoided that. And I always regretted it at that time. Like, oh, I would have had Goldman on my CV, and I would have been a star rising up at that place. And that doesn't matter that much for fintech. You know, it doesn't. I was not an economics major in college. I was a poli-sci and philosophy major. But, you know, you're inundated with econ at Northwestern, as you are at CMC. So you can almost inhale it here, right? Osmosis. But for me, aside from my friends, one, you know, my next door neighbor and great friend ended up at Treasury. Another one ended up in Nassim Taleb's 2 funds. So it was crazy. But, you know, I was the sleeper. I was a poli-sci person, kind of, and wanting to go to law school. And through tech, I got to a place where, I mean, we know what's driving the economy now. It's not interest rates decisions or central banks. It's, is this economy going to tilt toward pro-business or populism, right? That's driving thing, and that's all politics. It's amazing how it's very satisfying. I was telling some of the students I was sitting with earlier, one satisfying thing in your life is doing divergent things besides the pedigree you have from here, right? Doing divergent things. And maybe when the number in your age turns to 3, at that level now you're calming down from accumulating skills. Not accumulating money, just accumulating skills, real skill sets. And putting that together, as using that as real substantive Play-Doh, putting that together to make a life, right? What language do I want to do business in? Where do I want to live? What kind of person do I want to marry? What kind of job do I want to create for myself? And that's where we're headed, right? Like the old days before the Industrial Revolution, where we all were cogs in somebody else's machine. Because if automation is the key, then if there is such a thing as basic income for everybody, maybe it'll be, what do I want to do? What is going to make me complete? And you guys have a lot of divergent skill sets. Your own projects are going to make those come to fruition. And pedigree's not that much a part of that. Maybe in the network you create, but I'll tell you from my point of view, the most Ivy League folks I've interviewed, UPenn, Harvard, I never hired them. First question they always asked, and you should never do this especially with a tech job, is, what's my equity payout? That's like, I'll entertain the rest of the interview, but I will definitely cut it short because of that, if they get that far. If they ask that question, it's over. It's over. On a date with somebody that has a lot more money than you wouldn't ask them, so how much do you make, or how much money am I getting out of this? You just wouldn't do that, right? Simple. So never ask that question up top. If they're not forthcoming about that stuff also, then you can smell that that's probably not a good opportunity, right? But that's pedigree. Like, just know that in fintech, you've got people coming from state schools, from different industries that poured over to this, right? Like, and let's face it, if I had an 18-year-old or 22-year-old that had zero college, but they knew everything about Salesforce, right? They knew people at Salesforce so that my integration with them could be easier. If they had some, not even deep connections, because higher-ups don't matter that much. They have to have buy-in from everybody, so it's a lot of things you're working around. But if somebody had those real skill sets, even just Microsoft Office and some CRM, remember that. You don't have to be a tech genius or a coder to know how to operate a CRM system. It's just a Rolodex of now, right? How do I operate that? And it's somewhat data entry, somewhat keeping that with the information about the customer, every touch point, email, phone calls. If I know how to operate that, then I would employ that person way more than somebody with a 4-year degree. So that is humbling for me to say that, because I spend a lot of time in my education, as you are. But that person's worth a lot, more than a college degree, and more readily employable. Because in the digital age, a lot of the professional jobs, our company's automating a CFA's job. It's automating a PhD quant. So then where do you fit in, right? It's in fintech, getting the basics gets you in the door. Microsoft Office, kill it not only at Excel, but at PowerPoint, presenting that. How to present that, not just cut and paste that Excel sheet into your PowerPoint, not cut and paste my outline from my Word doc into my PowerPoint and 5 bullet points. No, make it a presentation. Make it 2 numbers. Spoon feed me insights. Spoon feed me, right? And the people on top need that. And the Provost University, when the investment fund or whatever the endowment here is presenting to them, they're presenting 3 numbers, not the whole Excel sheet in the back piece. Okay, FaceTime. All right, so a lot of people in those big banks, they end up being in the middle, right? They're using social media at work. They leave a coat or a sweater on their chair so that their boss thinks they're there. This happens especially in investment banking, which pays roughly like $6 an hour when you break it down. And a lot of it is waiting It's waiting. Hurry up and wait. We were talking about this earlier too. Hurry up and wait is the credo. And the funniest thing, is the law firm partner at an investment bank, okay, or that works with the investment bank, okay. The law firm partner has got to be the most sad job. It's the sad job. Why? Because a second-year analyst who's been waiting all night for something to happen so they can do what they do has been waiting, ordering Seamless and waiting, going out with their friends, but leaving that coat or sweater on the chair and the computer on so that their boss thinks they're there. And that's like so annoying. In fintech, I mean, we have 2 offices in New York and Atlanta, and I'm sometimes traveling, but I'm like, I guess I could leave my Skype on so people think I'm there, but if you're a small team, if the deliverables aren't happening, then you can't hide. You cannot hide in a small company. The bigger a company gets, the easier it is to hide, but if it gets, that's why you don't want to get too big, to have some success. But FaceTime, if the things aren't getting done, then it doesn't matter. Same in life, right? If there's tons of dishes piling up and your husband or wife has to do them and you're watching the bowl game with your friends all day, like on a Sunday, then that's FaceTime. Yeah, you're there, right? You're there, but come on. That's not a husband, That's not a person, a family member, right? Yeah, so I had to unlearn that. Immediate gratification. Wall Street is about pay me, get paid now. My bonus this year because I'm going to go somewhere else next year. This trade, if you're on the trading floor, and like making the most of this as opposed to a long-term thing. That thinking that way is just, you're not going to be successful in fintech, right? Immediate gratification, even knowing your business models. Not knowing your business model. Some of you probably don't know your major, right? That's okay. If you don't know your business model right away, or even the exact thing you do, right? For a tech company, as long as you kind of get into a place where there's a lot of problems and you're constantly pivoting to figure out exactly where you fit. And the market will tell you where you fit because they'll start buying it. I didn't know what an investment advisor was. I always thought there was this upper echelon private bank, private bank person that had a Swiss accent, and then E-Trade. That's what I thought. I didn't recognize this whole layer in the middle, independent investment advisors, which became our beta testers. That came to us. We just put a paywall up for $20 a month, and they started coming to us, and even Google searching for us, as opposed to being, it's not some big private equity company that invested in us that got that. It's coming up first and owning the term stress testing, portfolio stress testing software on Google. Totally egalitarian, and now to me, that's the new pedigree, coming up first in Google search, right? But immediate gratification, it's not going to happen for you for fintech success and definitely for life. A small comment on college hookup culture, that's not going to help you. Just trust me, you're going to be a mess by the time you're my age. And unmarriable. Conformity. So Wall Street, you're buying the same things as your friends. People look the same. That striped shirt guy, there's like the Wall Street guy. They comb their hair the same way. They have the same shirt and think a different way. That's the most superficial layer. Get down to groupthink of the financial crisis. Every bank is thinking the same way. They're all like they're milking the U.S. Residential real estate market the same way, and it's just like the same. Everybody's in the same trade, right? Everybody's long gold as it touches 2,000. Everybody's long Hillary Clinton. It's just conformity of all. It's just the way we are, maybe, but that is not going to get you success in fintech for sure. I remember the Schwab CEO at their conference in November saying there are 78 robo-advisors. Automated investment advice. They automate rebalancing in a portfolio, automate investment decisions, whatever. But there's 78 of them. And he said, we aren't working with any of them. We made our own. That's commoditized tech, right? But VC dollars, they throw They all want the same nickel. They all want their horse in the race. If I had taken VC money, I would be a macro-theme robo. I don't know my level of success in that era, but that's what I'd be. Instead, we wanted to be a risk platform, kind of being able to translate big picture macro risks, event-based stuff, different spikes or crashes in commodities, and then, of course, things like the Trump agenda or Trump healthcare regime versus Obamacare. How would that affect a bucket of investments? And so keeping on that train, things have come toward our side. It's crystallized. So conformity is it's just, Wall Street is a culture of that, for sure. Just recognize that. Even I remember in the late 90s, early 2000s, it was the Burberry scarf. Every person on Wall Street had that Burberry scarf. And for women, it's probably that Longchamps bag. Yeah. It's annoying. I mean, there's got to be different bags that are good, right? Also for the ladies, just so you know, if most of the culture on Wall Street, if you see a girl with a Louis Vuitton bag, go the other way. The guys go the other way. Because you already know about your consumption habits. And that brings us to this, materialism. Materialism, who I am, what I'm worth is based on my watch, right? Based on the watch. I remember folks on Wall Street just needing this watch, needing it. It's like my iPhone tells time. I have so many ways to tell time. It's all around me. I can't avoid it in New York. And I'm getting this crazy watch for no reason. And the best is the way they talk about it, all right? They use the word big boy watch. Big boy watch. It's so annoyingly unnecessary. It's unnecessary. This is the same person that's going to get a house that's way too big for them and a Hummer. And, that's for you, buddy. So you have to unlearn that stuff, right? Save money. Save it. All the money that you're making there, save it. Retire 10 years early and start a project. I consider myself totally retired. I'm a hobbyist. One of those hobbies is fintech. But that materialism, that need to consume stuff, already at your generation, it's leaving, right? You guys want experiences more than stuff. Experiences are definitely cheaper. They're less contributing to the GNP. So stick with that. Stick with that. And you'll be the coolest person in your cadet class or whatever that is. You'll stay away from all the consumption, right? And so that could be expensive creams. If you notice, with the rise of women's salaries, which is still 70 cents for every dollar, that 77 cents still buys a lot of expensive creams, right? And so I'd say stick with the stuff you get at the hotels. They send you to hotels all the time. You get all this free stuff. Just bring it back and use that. It's not hard. But unlearning that, especially for a tech startup, is really important. Be lean. If they give you a ton of money, if you do take that VC route, if you're in that, when you're interviewing at a startup as opposed to a big bank, and you say, "Can I see your P&L?" They should show you that. And what's your burn rate? Ask those basic questions. Another question would be, what's your biggest money waste that you regret? That will get you the job. Actually, that question. What's your biggest money waste that you regret? You look at, I think it's Airbnb's offices in San Francisco. They have this huge $1 million statue in the lobby, and the only reason they keep it is because it was such a pissing away of money to remember, a self-made wound. Okay, appearances over substance. Right, you see this on the quarterly earnings reports, window dressing, and then whatever happens to the investors later, we don't care. This happens with the clothes you're wearing. And you may be in an apartment that's like a box, but you have a Maybach, you have a Mercedes. You're spending money out on the town, models and bottles, but you're inside, you're totally in debt, right? That's happening a lot. During the financial crisis, it was amazing to see the amount of repossessed airplanes, right? That means people at that level living hand to mouth. Even our president, frankly, lives hand to mouth, right? He's not going to come out and say that, but the reason that there's no shady dealings in his taxes probably what it is he just didn't, he's talking more about more earnings than he actually had, right? Yeah, it doesn't. It's appearances over substance, and same with the Clintons, right? You saw their foundation and all that, and really that paid for their daughter's wedding or doing. It's appearances, right? So that's in society we can see that. In Wall Street, that's every day. How it looks as opposed to the corrosion happening underneath. Let's get rid of this risk off our books if we're Goldman or Countrywide, whatever, and then keep saying the right things. Appearances over substance, right? To the last day when Bear Stearns went down, they said, oh, we're in good shape. Lehman too, right? It was like, you know the substance, and so listen to that. And definitely that will get you so far in life. That will get you so far in life, especially as, Wall Street is a heightened version of keeping up with the Joneses. Because it's one of the biggest earning industries, right? Maybe pharma's second. But as you see that, just know when you're reading someone and they're spending their money in the wrong way, or there's a facade of wealth and behind it is a house of cards, right? And for yourselves, be the opposite of that. That's what I'd say. For us, I'm a bootstrap company with 60% margins. I'm doing things the opposite way of fintech in some ways, right? Not a big raised round and a big board of high caliber advisors. No. I came through the dot-com era. Don't want that. Don't want a lot of money. It's fintech. There's businesses to support my revenue stream that supports my company. Our company, in terms of the amount we invested, was 20 grand between me and my co-founder. 20 grand total. And now it runs on the house's money, right? We don't have boondoggles, right? We don't have random tech adventures doing the wrong thing, following a crowd or whatever, based on speculation of what's going to be hot. If somebody's willing to pay for it, we build it. Our regression engine underneath, right? It basically calculates 2-year and 10-year regression between all the securities of the United States that are exchange traded, and even options, even private investments. That if you can give us a time data series, we'll take 2-year and 10-year regression against it, against about 130 economic indicators. That's the engine that comes underneath Hidden Levers user interface. And guess what? It was vaporware until we had 100 customers. Okay, 100 customers paying $50 a month, $20 a month, $100 a month, somewhere in there. We got covered in Barron's for that. And then we finally built the regression engine, because I guess we had to, right? If somebody's not willing to pay you for it, don't do it. Until then, have a facade. That's tech. That's the beauty of tech. Have the mocks. Have a model of what it could look like. And when someone pays you for it, do it. For us, that was substance over that. I also wanted to prove that we could build it ourselves. I had a white male boss for a long time, and I didn't want another one. So I'm just done with venture capital. And now even, I just don't want a boss. I don't. If I want a boss, it's the customer. Let them tell me, because at least they're paying me again and again. Climbing one ladder, right? So, there's this big concern for titles on the street. VP is the most meaningless title ever, okay? Except for today. Today in the country, I don't know if you know, Mike Pence is the reason that the education secretary got in. First time that's been used in a long time, where they broke the tie. So VP is not always useless or anything, but on Wall Street, that term is it's just like water, doesn't matter. MD, that means, I guess it's meaningful. You could, but really it'd be, you're at the risk of just stroking your own ego. Your mom will tell her friends, oh, my kid's an MD, you got a pay raise. I'd say that's the day where you start working the hardest. Same in a law firm, right? Once you make partner, that's when the grueling work starts and divorces happen because you're never home. So just be careful about titles in general, right? In fintech, there's not that many titles. If it's a small team, our team has I never call myself anything but a co-founder. And that's an ego check somewhat, but also it's not neat and clean. There's only 2 real roles. I'm either making something or I'm selling something in the end. And if I'm not doing either of those, then I have to really question, do I belong here, or do they value me? Are they going to give me a raise? They're not. Those are the 2 roles. Or are they running a company well? Right. So, but climbing one ladder on a bigger arc, certainly the girl or boy you're dating here will not be who you marry. If you do, that's going to be, I mean, Al Gore married his high school sweetheart, and they got divorced after he lost the presidency. So nothing is forever. Nothing in our generation. Lifespans are longer. And so that career person at Goldman that's been working there 40 years, for our generation, I think in general that's a tragedy, because you wouldn't have different experiences. And then also those different experiences that are divergent lead you to an original life, an original project, as opposed to an accomplishment drone, right? So climbing that one ladder, don't do that. Don't even think about that. I'd say until you're 30, try to collect 3 cities, 3 big experiences, maybe 3 dating experiences, and that way you have some semblance of knowing what's at the buffet of life and choices. And then also you can create your own thing, right? If you look at the choppiest job history of anybody we know, it's Steve Jobs, right? And come on, what a great work life he had. And so climbing one ladder, it's not gonna, don't do that. The best careers today are gonna be our careers in transition, right? I came from wanting to do policy work and maybe go to public policy school, law school, into the dot-com boom, knowing that macro trend was gonna take me somewhere interesting, and I could always go to law school. Went into advertising, became a copywriter, an art direction person, and then into law school after 9/11, when all of a sudden I needed to leave that New York darkness, and then after that came into Wall Street instead of just a straight law firm, and then from Wall Street came into fintech, and then that taught me how to run a show, and then let me apply that to a nonprofit in art. Let me apply that to building a pistachio farm in Central Coast, California. Whatever that those dreams are, it's a career in transition. I think now, I've been asked to become like a talk show host from a couple different outlets like Vice or Amazon Studios around seriousness, talking to a millennial generation about serious topics that Charlie Rose will never be able to do, never be able to connect that way. And so those careers, and the best careers are careers in transition. I think about if our company sells, do I want to do that? Or would I rather just make my own art on big macro topics, the same way we do in somewhat with Hidden Levers, but just it's straight up art. And if people want to buy it, they can, right? To talk about the issues of today, macro topics. And so without that winding road, I wouldn't have got there or had some new opportunities. But climbing one ladder, I still see my friends from a trading floor that are there. Some of them earn more money than I do still, and that's one. But they're still there. They didn't have any adventures, Their lives were up and down with the Mexico markets, which it's pretty exciting for sure. But they're still there, And I look at them the same way as I look at the maitre d' at my favorite restaurant in New York. They're still there. It's awesome because there's that familiarity and comfort for me, but I feel bad for them because they didn't get out of that environment. And so you have that opportunity. So I would say wreck your comfort zone, don't climb one ladder, and if you left a good impression, it'll be there. Maybe you'll date that person again. Yeah, I've seen that too. Work politics. Okay, so you're seeing definitely in the national landscape for the past 6 years, you saw politics creating gridlock. Not much got done, and now it's being easily undone. And that happens at the workplace every day. And even now, what's happening at the government level, it's more gridlock. Nothing's going to get done. There's no tax cuts happening, no ACA getting repealed. It's just kind of butting heads, and it's just nothing's getting done. So that happens all the time in big banks. That happens all the time. Nothing is getting done. They move forward at like a Star Destroyer moves, not like a X-Wing fighter, just really slow, powerful and big, but just incapable, not making decisions for years. And so work politics is something, and then also, just like prison culture, that Wall Street culture is all about, well, am I in with this person? Are we together? Will they support me? Will they promote me over that? And you get so caught up in that's why you start climbing that ladder, because you're so invested in it. And that workplace politics is, honestly, even if you get it, it's going to lead to a B plus, as opposed to what I was using it for in the end, reconnaissance on how to use a Bloomberg, what's the language of this industry, how to talk to people, connections that are maybe come in handy, how are purchasing decisions made, how the markets work, how economics works, all the things I can learn, and then just leave it. I did that with law school too. It was the hardest thing, I went to Pepperdine on a full ride instead of going to UCLA and paying, right? And or a big Ivy League school and having to pay. And if I had done that, I would have been so invested in the politics around being that and that pedigree that I would have needed to pursue that into a law firm. It was so easy for me with Pepperdine and paid for, and just a skill set I have to park that. And even when my parents said, "Oh, you're going to stop practicing law?" I'm like, I'm going to the trading floor. It's better. It's better, I think, for me. You're front office all of a sudden. You realize who you are. I'm not meant to be doing contracts in a dungeon. I'm meant to be front office, talking to people. And that politics thing really comes in a startup, right? In a startup, in a family, it's much more like a family oriented. It's going to be small, right? If it's he said, she said, you're not getting anything done. If it's someone trying to jockey and being disappointed, then you're just dealing with other people's bull instead of progress. And so if you want to make progress on the product, no ownership of ideas. So we're very egalitarian. If they need a title, then I'll come up with a title for them. But it's like, I don't want politics at our shop. And after 10 people, it's difficult, right? But none of that is going to carry you forward, right? It's all interfighting and all that. Nothing gets done. You're seeing that here at the presidential and Supreme Court level, or the Ninth Circuit, I guess. And you're seeing it in companies every day. And that's why things don't get done. Some decisions do get made because of politics. And so when I remember leaving that and saying, oh man, goodbye to big company politics, guess what? I'm selling into those companies. So there's stakeholders that I've got to court, and really an enterprise software salesperson is the Frank Underwood of Silicon Valley. If you know House of Cards and how they're positioning and jockeying and got to get people to, like, who do you have to bow down to? It's everybody and their politics and knowing them, knowing their lives. That's what gets things done when you're doing B2B tech sales. And it's big decisions. So workplace politics, you have to unlearn. Wall Street is full of that. For at your level, I'd hold on to, don't try and climb this ladder. Learn everything I can. I'm the CIA. I'm just here on recon. I've been put in as an insider. They don't know that. I'm learning everything, inhaling it. And once I'm learned everything, maybe I don't have that job satisfaction thing anyway, then I'm happy to leave because I want to learn other things. And like I said, until you're 30, that's going to be an awesome modus operandi. Last one. Money is the same as happiness and freedom. This is the biggest thing that you'll learn. I make less money now than I did. I'm a bootstrapper, so it's not like our company's worth $100 million. It's probably worth maybe somewhere between 20 and 30, maybe. Based on our revenue, based on multiples, whatever. And my paycheck is smaller than even my sales guys. You have to pay your sales guys, right? They should get paid more than the founders if the company is doing well, right? But I have so much freedom. Geography is kind of a concept to me. I can be in New York and LA equally at a moment's notice. Don't take advantage of that. freedom from needing to deal with everything. This is a common question we ask. Would you rather be the Winklevi brothers with like $65 million in freedom, which they put into Bitcoin, and we know where that is? Or would you rather be Mark Zuckerberg with like, oh, you are still in charge of this whole beast. You're every day, it's like you're probably have hypertension and like it's just weighing on you. Even if things are great, even if you're changing the world, even if you're making the world a better place, like it's just, can I take a dump and relax? I doubt he can. And so it's like that kind of happiness and freedom is really important. They're not the same thing. Happiness, I know that after about 40K of income, happiness levels off, right? Money is necessary, some living, but it really levels off. And then we have all the first world problems, right, of people with too much money. But I'll tell you, if you can get rid of the materialism part, if you can get rid of that, then money doesn't equal happiness. You have a certain amount of money, there is some power there to get freedom, right? And if you're not a huge consumer of stuff, I need a bigger house, I need a bigger car, I need more stuff, I need more and more stuff, then freedom is you can disconnect that, right? And so I'd say for those years where you are making some serious coin on your first jobs, maybe more than your friends that go into consulting, more than your friends that go into other stuff, then I'd say save that, do save that, and maybe take care of them. Take care of them on a Friday night at dinner. Maybe they're in grad school. I think the best feeling I have having some income is taking care of my friends who didn't make it like that. And in 2009, after the financial crisis, I went from having my own house in Chelsea to I lived in my car for a while. I lived in my car, and it took that to start that company. I remember being 22 in New York and kind of a cocky kid and saying to my dad, "I'd rather be homeless in New York than live under your roof again." And Indians are pretty kind of doting. I could have had a wife and a kid living in the bed I grew up in. It would have been fine. But I told my dad I'd rather live homeless in New York than under that roof again, being coddled. And it came true. And I'll tell you, my friends from those Wall Street days when I had a credit card and a slush fund, basically, I always took care of my friends that were in their medical residency or were in PhD candidates or, all the extra food that was ordered, because that's another culture, part of the culture. Over-ordering food, over-consumption, get the best, get more of it. Instead of tossing that, like, you paid for it, so give it away to a homeless person or to the homeless people stick together, especially in LA or in New York, so you can give it to all of them. It's easy. So that provided more happiness, but it will come back for you. That amount of money, that amount of excess, right? If you have it, it doesn't last forever. It's for a few years, and so take care of your friends, because those medical residents became anesthesiologists and radiologists, and during the financial crisis when I was down and out, they definitely took care of me. They definitely took care of me, and so that it will be its own reward. But I think even as a country, I'll finish with this. Like as a country, we've seen immense stratification, right? We are for all the things that you might believe about Obama, the largest inequality delta happened in that term. And it's continuing. It's not him, it's just America. It's automation. It's automation, right? There's being on the right side of history, the digital divide being that big line. Am I a maker of tech or am I a consumer of tech, right? And even for us, like we joke that we're tech middle class, right? Because we run a small business in a way that isn't aiming to be $1 billion company. If I was, I'd have to get everything right and have tons of regulators up my butt. I just don't want any of that, right? But here, this kind of middle road where you can be on the right side of history, makers of tech, you're creating that automation phenomenon. You're helping make that, and that will replace jobs. That will only increase that stratification between rich and poor. Automation, right? So whatever you can do to alleviate that, marrying somebody outside your socioeconomic class, that doesn't really happen now. Maybe buying somebody dinner, whatever that is. That sense of generosity that I know that millennials have much more than their parents, keep that with the more money you make. I'll finish here. The way to judge a friend or somebody you want to fall in love with, it's like, it's not how much money they make, it's just the ratio. You guys are into numbers, right? The ratio. Is their heart bigger than their wallet? Right? And no matter how little money you have, make sure your heart's bigger than your wallet always. And as you grow, if it's financial services, fintech, law, whatever you end up in, make sure your heart is bigger than your wallet. Because that'll get you really far. Yeah, thanks.